Well, hello traders and investors. I'm LA Little. This is your daily NeoTA wrap. We take a look at these markets from a neoclassical perspective, looking at supply and demand on the charts and using that information to know what this market wants to do next. It's about test, folks. That's price discovery. Testing is the way it's done. You look at the test, you know what's significant, you see how it tests, you make decisions about what comes next. That's neoclassical, that's simple, that's how it's done. Do this show 4 times a week, Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube, and it's under the channel LA Little. If you want to subscribe to free content, just push the button. Anytime I push it, push public content, that is, you will get a notification as far as these markets and what are they doing. Well, you know, some things, they never change. S&P gets over the high. Finally, right? 2402 was the close. 2401 was the number back there. You get over it, you stay over it, you have less volume. It is a suspect breakout, but you know what? Suspect breakouts can carry. It doesn't mean it's going to die. It's not dead on arrival when it shows up that way. It just says it has a lower percentage for a longer term move. In other words, it will probably be back to retest regen within 6 bars, and I wouldn't be surprised to see it do within 1. In other words, tomorrow. Volumes aren't coming in tonight. They'll be in late, it looks like. I tried to delay this to grab them. I wanted to see what they were, but whenever they do come in, we'll see what they are. I doubt seriously if that's going to be more volume than we see over here, and so it probably will end up suspect. When I said things don't change, it's the NDX, folks. It's been the NDX. You had a slight change tonight. You got a new high here. But if you look at what's driving it, it wasn't big cap technology. In other words, it wasn't Apple, Google, Microsoft, all those big cap guys. What it was one that took off last week with the NVIDIA move and continued today. That's the SOX. SOX pouring it on. Right, another big breakout, another big move. If you pull this back and look at the SOX, this has been one heck of a run. If you go back to May of last year, you've pushed from 94 to 139. You've almost doubled the price, about 40% to the north. And if you look at it over multiple years, going back to 2011, it has been one heck of a run from 47 to that current number of 137, so almost a triple. Technology's been where it's at. If you take and do an ABCD structure off of here, that structure is about done. I mean, the one I'm looking at, I believe, started here, moved us up to there. The low point was there, and I say about done is what I should have said. More than done, right? And so this thing has continued up a long time, longer than it should have, but sometimes that's the way it works. Sometimes you get more than one-to-one extensions. If I look through this group, though, and if you realize what's been moving us, it's been technology, big cap technology, and that's the Apples and Googles of the world, and the Amazons. Well, the Amazons of the world, at least the discretionary, is not moving higher. It's taking a break. That's a good thing if you're bullish, right? You want that money to just simply rotate somewhere else for a while. XLV is still up here hanging and got a nice little move today. We'll see how far that one can push. That's where money could go. Industrials, another one that's taking a break just like the XLY. Again, that's good if you're just hanging on waiting for this thing to recharge and go again. The one that won't recharge but just keeps running is technology itself. That's shown here in the XLK. This thing has not slowed down. If you do an ABCD structure here, and I'll tell you, when it first started developed, I didn't think it was possible because at the time it was already stretched. But look at this thing, continuing on upward on the path, now has a nested ABCD structure inside of it to get it up towards this huge target that was up here. That is one heck of a run. If we look elsewhere, though, you're not getting any help from the financials. You had a big move in oil today to the upside, yet that didn't give it any help. You've had the transports languishing for weeks and still doing so. And by biotech, even though biotech came off those lows, this still is in a huge range. If you pull back and look at it on a weekly, it's still within this large range. It is up towards the top of the range. I can't say anything bad about this market because it keeps doing what it needs to do. The only thing I can say that's bad is you're extended. Have been extended and continue to be extended. And that extension is what makes it feel like a grind. And even though, you can be happy that it's grinding to the north, the problem is that grind, the way those typically end is you get 2 or 3 days to the downside. 76% now. Bullish still has a way to go on the daily time frame. Intermediate, quite extended almost everywhere on the indexes. The bad news, as I was just saying, is that when you get this kind of a grind going and you do finally get a turn, right, usually 2 or 3 days takes you back 2 or 3 months. In this case, it'd take you back almost 3 months if and when it happens. So if you pulled back to the bottom of this range, for example, somewhere over the next few days, then you'd be right back where you were 3 months ago. And actually, if you take the high of 3 months ago, you're there now, right? I mean, so you've taken basically 3 months to get back to where you were, at least on this index. Of course, others, very different. What else is happening? I looked at debt. I don't see anything there. I looked at the currencies. The dollar is languishing. If you look at it on the daily time frame, it's down here near the lows. On the weekly, doing the same. On the monthly, still quite bullish in a big range. If you look over at the euro, of course, doing pretty much the opposite. On the daily, pushing towards the highs. The weekly, coming back towards this swing point low. This is a bearish retest regen if it can get back up there. It's about 106.5, 107, I think. Looks like it's about 107 is the low, 106.79. Got almost to it. Looks like it's going to get to it this time. It does have an ABCD structure, so this will be a battle when it gets into this area, because usually odds are fairly high that the bottom third of that zone is where it's going to turn and come back the other way, which means this would fail if that happens. So something to watch. That euro has not done anything to the overseas markets. Matter of fact, if I look at the overseas markets, in particular, if I look at the German DAX, that thing's setting new highs again. And so there's really no give up over here in Europe so far. They keep stretching. Stretch they are. If you look at the CAC, it's not at new highs. If you look at the Swiss market, the Swiss market actually went over back under today. So, to me, this is a mixed bag over in this neck of the woods. And my expectation is that neck of the woods is actually going to pull back. Where have things been hurting? Well, you don't have to look very far. I mean, you can look at actually, if you look at just the earnings that have come out, we're wrapping up the earnings. If you look at those, the sectors that you had disappointments in, they've continued to disappoint. Like, here's the small cap financials, for example. I could go down the list. There's a number of these sectors that have done this, but in general, the thing has been is that those sectors that have outperformed big. Those that haven't, they've either traded down or they've been range bound. And that's how we look here on the agribusiness, for example, as another sector that can't pull away. Now, some sectors have been very strong. Aerospace and defense, for example. And that one, a little bit of a consolidation lately. But if you go to some of these others, like, say, for example, how about robotics, for example? Look at the tear that thing has been on. Or the cloud computing. Or the social media index. I mean, you can go across here and find sectors that have been very strong. Many of those are technology driven. Those are the ones that have carried the market. And, when they finally find that they can't go up anymore, either you're going to rotate or you're going to come back down. It's one of the two. And I saw a piece, I reposted it this morning on the Twitter. If you haven't looked at the Twitter lately, or if you're not a member of Twitter, I did post it, and I'm going to pop it up here for a second if I can, see if I can pull this over And let's grab this and pull it down here. This was an interesting morning note this morning I saw that I retweeted. Let's see here, May 12th, 13th. Oh, here it is. 30 days. Look at the stat. In the last 70 days, the FANGs, which is Apple, Amazon, Facebook, so forth, 260 billion in value they've gained. The rest of the 495 companies, they lost an identical amount. It tells you two things. One, that's it's simply rotating. The money's rotating into those stocks, at least for now. Now maybe it's going to come rotate back afterwards. But what it's telling you is that the inflow of money into these stocks looks like this. It's a flat line, right? Everything that went into these came out of those, and you got a flat line out of it. Folks, I don't expect this market to get up and run and make a new leg higher. You've got the extensions already on technology. Unless this changes, right? Unless you all of a sudden you get a big drift of money coming into this market's going to simply continue to chop. Some's going to win, some's going to lose. And you just got to find which ones are which and keep rotating into those and play them as trades as long as this market's doing this kind of stuff. Have yourself a great one, and I'll see you next time. Good night.